Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to do an update on Tesla stock because yesterday we have had the Q1 earnings 2021, which in my opinion they were great. Okay, so I have been quite satisfied actually by those numbers. And today, however, we have seen the stock actually selling off a little bit. At the moment, we are around minus 3% on Tesla stock. So in today's video, guys, I want to actually go on and see why is the stock selling off a little bit. Take a look and compare them with actually my fundamental analysis on Tesla stock. And I'm gonna give you also my idea on why I actually think that a percentage of investors probably have extreme expectations on Tesla, even though the business is absolutely doing great. And this could be probably the reason why sometimes we see these kind of sell-offs after earnings. Okay, so anyway, that's just my idea, but you know that I like to be honest, so maybe some of you won't like that, but you know what, that's how I like to be actually. And the only thing I ask you guys as always is please leave me a like, it's very important and I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Now, on Tesla stock earnings, actually, I'm pretty sure that you have seen those numbers. You know those numbers very well. I will not talk about that in details. I think that it can be boring. Probably, yeah, you already know all this kind of stuff. So I will only talk about the key facts over there. Tesla reached 9 billion total automotive revenue. Now, if we deduct automotive leasing, we have actually a 22% margin, which has been improving considering the previous quarters of 2020. So that's a positive sign. Actually, what I don't like much about Tesla earnings yesterday, the only thing, let's say, that I don't like is about the energy generation and storage part of the business, because we have had 494 million in revenue for Q1, but then the costs were higher, okay, so 595, meaning that we are negative. And this is not something that I like to see. The energy generation and storage part of the business of Tesla is very important for the valuation of Tesla going on in the future. However, in terms of total revenue, we hit 10.38 billion. Actually, the market expectation was 10.41, but you know, I can consider it actually meeting expectations. That's fair enough. They beat expectation, however, on earnings per share and free cash flow, because free cash flow was considered to be negative. Instead, it was positive, and as well as the net income over there, quite great, 464 million for Tesla stock. An interesting part of it, which actually they have confirmed as well in the earnings call, is the volume. So we plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicles delivery. In some years, we may grow faster, which we expect to be the case in 2021. Now, this is actually something that I like to see because it's exactly what I have estimated. If you remember, for my valuation over there, I said deliveries in 2021 around 900,000 vehicles. Now, I put here the key data from the earnings, trying to compare it with the valuation. First of all, I got comments in the previous video. Actually, a guy told me that this scenario was biased on the bull side. Well, absolutely it is, because as you can read above the model, you have a bull case scenario. So this, in my opinion, an optimistic part of Tesla. It looks like that Tesla at the moment seems to be in line by reaching it. Now, remember that Q1 on average has been the worst quarter for Tesla And the automotive business historically in terms of cyclicality of the business itself. And then also remember that for this quarter, actually the production of Model S and X were zero. Just by having an idea, we see that by annualizing it, we have automotive revenues 36 billion, 3.5 billion for services, 1.9, almost 2 billion for the energy business, and then Robotaxi zero. Now, I expect the end number to be higher than that. If you follow my channel, you already know that in this case, those are my ends numbers. So for the automotive revenues, I expect a 45.9 billion. Then for services, I expect around 4 billion instead of 3.5 by analyzing it. And the energy storage, I expect 2.69 billion. Here, in my scenario, I was actually expecting a positive gross margin on that. So that's what I don't like to see. In Q1, it was negative. So it has to get better. And then Robotaxi is zero, obviously. The thing is that this scenario, which in my opinion is a positive one, okay, so I call it the bull case, we have a growth which is significant, and we cannot deny that. We have a total revenue of 52.6 billion by the end of 2021, meaning a 67% growth for Tesla. Now that's massive, but in my opinion, with Q1 from those numbers, I continue to remain confident that Tesla can come very near to that if everything goes right in 2021. However, what is even more massive is what will come by 2022 going on in the future. As we can see, the growth over there is pretty significant. Now, if you remember from my previous video, actually what all of that is about in terms of price target and fair prices is actually 3 different scenarios, 3 different valuation, EBITDA, the price to sales ratio, and the free cash flow per share valuation. All of that together gives us a price target of $1,224 by 2025. Now here it's included also dilution, as we can see over there, all right? Now an interesting part is that in terms of financials, if we take a look at the earnings from yesterday, Tesla is still well positioned. They have cash to continue to develop and invest in the business going on in the next 3 years. So, well, this dilution can probably be reduced over there. However, in terms of being more conservative, I prefer to keep it like that. Then when we take a look at the fair price, according to that scenario, we had an average fair price of $851 per share. Now, what is the fact and why actually Tesla today was selling off a little bit? Now, at the moment, it looks like it is around $715 per share. The fact is that this scenario, in my opinion, I tell you once again, it's an optimistic scenario, right? The growth that this scenario implies is absolutely massive for Tesla. Actually going to reach 241.5 billion dollars in revenue by 2025. And this scenario actually includes the success of Robotaxi up to a 25% addition to the automotive revenues by 2025. Now, here is another question mark, especially as we have seen in the past week with the crash that has happened. It looks like that everyone is against Tesla. Everyone likes Tesla to actually fail. So yeah, also in terms of regulations, this is not easy to achieve. So when we understand all of that, it's kind of easy actually to understand why Tesla sold off a little bit post earnings. And the fact is that when you have already basically all of that growth already priced in, it's very difficult to surprise during earnings, because that scenario that I told you gives you a fair price of $850 per share, which in my opinion is quite a bullish case. But in terms of the price, 715 today, it means that 84% of actually this growth that I have just showed you is already priced in the company. So it's all about expectations. I am bullish on Tesla. I continue to have a positive outlook for the coming years. However, I am aware that if you buy Tesla above $700 per share, actually you are already pricing in a lot of stuff, which today actually Tesla in every earnings it's always on the edge because expectations are so high that even though if something slightly goes wrong or just a slightly miss as we have seen actually makes investor think, because remember once again here we have the success of Robotaxi, we have 4.1 million vehicles by 2025, and then we have great margins. Tesla has a very great business, the growth there has been incredible, and the problem is that expectations, guys, are high as well, so it's very easy to go there, miss something, and investors actually are not happy about that because in the price lots of growth is already priced in. So in terms of risk reward it's actually easier for Tesla to miss those expectations instead of surprising them. But this is not Tesla's fault, this is the investors' expectations fault. You want to be realistic, okay? Or at least for me, I like to be real when I value stock, and this is already a bull case in my opinion. I will be extremely happy to see Tesla reaching this kind of growth. So the reality, guys, is that in my opinion Tesla, if you buy it at above 700, you continue to have lots of growth priced in, and whatever can go wrong, you will have a bumpy ride. Just keep an eye on that. Tesla remains a great company, but in my opinion is now a portfolio structure stock. What I mean by that is that Tesla now, I compare it to something like Google, Amazon, okay? Those kind of companies that you buy them, if they continue to perform well, they will outperform overall the S&P, so they will do great, but expecting another 5-6x in 5 years, in my opinion, is not realistic. So even though probably lots of people will not like that, actually this is what I think, this is what in my opinion it will go on in the market in the next 5 years. Anyway, I continue obviously to keep Tesla in my portfolio, and I'm quite happy about those earnings that they released. So I hope you find the video interesting, guys, and leave me a like, leave me a comment below. Actually tell me, what do you think about the earnings? Are you happy with them or not? Subscribe to the channel if you want, and as always, guys, have a wonderful day.